Today is the video for Friday, September the 10th. There's our true and tested McClellan oscillator, and it has broken down further. It is certainly now headed again to the oversold area. The summation index, we've been tracking the summation index, and it's done this. It's gone up, and then now it's started for 2 days to have gone down. Now the last time we saw it starting to go up and then it turned down, it continued down for quite a while, and it had this kind of a pullback in the S&P. Could that happen again? Well, when the McClellan oscillator turned down here, we had this drop in the S&P. When it turned down here, we had this drop in the S&P, and similarly it moved up and then it moved down, and then we were followed by a few days later, a week later maybe, this one. And you can see that is pretty consistent. In here we had a top, and then we followed by 5 days later a pullback. So let's just keep an eye on that, and certainly that is what the charts are telling us. There's the Dow Jones, and you can see this big drop in the Dow Jones, and the Chiku span ended the day right here, but it did not, actually a little bit lower, maybe like right there, but it did not hit the 50. So we'd be looking for the Chiku span next to come a little bit lower, but overall we're probably looking for the S&P. We're going to put that right there. We're looking for the S&P probably to come and touch the cloud down here, unless, as it did here, the Dow Jones, unless this bounce proves to be the one that's foretelling. Now in the NASDAQ, we had the pullback, so we're heading to the 50. That would be a big drop, but that could be helped by Apple. We're going to see that in a second. And the S&P we said was coming down. It's coming in for a date with the 50 as well, and the Chiku span is looking for support somewhere in the area of 44.40 this week on the candles. If it breaks through that, then that means that the price will be going down to the 50, and then the Chiku span will be underneath the candles. Apple had a big bad day because of a ruling against it that says they have to change one of their policies on the App Store. I'm sure they're going to appeal that, but in any case, it was probably $85 billion worth of lost revenue in this, not lost revenue, but lost capitalization in this sale, because it's really going to affect a very highly profitable part of their operation. Caterpillar, I bought another 100 Caterpillar because it's a good dividend stock. It's a great dividend stock, and the dividend should be coming up next month or so. I'll have to check. So now I've bought a total of this many, 500, and I sold the October 210 calls for 424. So that would put my break-even point at 214.24. So roughly there would be my break-even point, and that would bring me up through where I bought my last one, and would bring me up above the 50 resistance. So I'm feeling good about that. IBM, I'm feeling pretty good that it's heading down to the 200, because again, it's a good dividend stock, like to collect the dividends, and I've got the short 145 calls for just under $2. NIO continues to struggle, rejection on the 50. This stochastic has almost run its course. It should be hitting the bottom soon. SAVA, struggling. And where did it stop today? The Chiku span on the 50. So we moved that line right there, and you can see that the Chiku span actually made it up that high, but the 50 was sort of a bugaboo for it. Square is another stock that's really disappointing and really ticking me off. So I've gotten tighter on my short calls, and I got rid of my October 280 calls, which are moving too slowly. And now I have this week's 250 calls at 425. So my break even will be right around in here. But I do expect now that the stock, since it's lost support of the candles, and that it's heading down to the 50. So that would be getting its support right in here somewhere, but it's equally possible that it runs into the 200 simple moving average and the cloud, which is more appealing because there's two things happening at the same time, and we have both of our stochastics on the way down. So square is ripe for being shorted. If you've got the stock, get really tight with the short calls. At least that's what I'm doing. Anything else to show? Coca-Cola, support on the cloud. CVS, let's see where the Chiku span was. The Chiku span was nowhere, bounced off, well, it stayed above the top of this candle, but it's still got room to go down. CVS has still got room to go down. NVIDIA, somebody asked me to look at Jazz. So this video is over. Nothing more to say. I just think that this is going to be a miserable week. It's going to be a bad week. A lot of stocks heading towards the 50 for comfort. So now I'm going to go and take a look at a new stock, and we're going to take a look at Jazz on a technical basis. So let's go in here and type J-E-J-A-Z-Z. That doesn't recognize it, so let's go and do a search. And let's look in the local database for Jazz. Jazz, I can't type. Jazz, there it is. So here's Jazz. Whoa, what an ugly stock. So we don't need to look at the Chiku span. We don't need to look at the Ichimoku. Let's just take a look at nothing but the moving averages. First, come on, what's going on here? Moving averages. There's all of our moving averages, and it is doing just miserably. It's a biotech stock like SAVA. You know, one shorting law company who files an FDA complaint can bring a stock down on absolutely no merit whatsoever. Welcome to American tort law. It's just not looking good at all. You've got to be in love with this stock to want to buy it. But let's look at some Fibonacci's. Certainly the moving averages are telling us deadly. Crossover of the 50 over the 200 happened here for the EMAs and happened here quite recently, August the 29th for the SMAs. So that's pretty recently bad news. Let's just take a look at a Fibonacci. So let's do the Fibonacci retracement. And we've got a double top here. So let's just take this point right here. The double top would be there. So let's take this point and let's bring it down to where most of the chatter was here. We had a couple of days where it cratered. Let's see if that gives us anything. Well, 61.8 was the pullback. If we take the full hit, 61.8 would be even further to go. So there's a bit of danger there, even if we give ourselves a bit of positivity and say that this would be the measurable zero, because it's also pretty close to this one here. You can see this low is pretty darn close to that one. So the lows are important. If nothing, you could say it could be heading down to the 90s. Do we see any Gartley patterns? Let's just take a look at our auto harmonic, and we don't see any Gartley patterns here at all. So the Fibonacci's are telling us we have at least a little bit more to drop down to 129.35. The averages are telling us that we have a lot of room to go down. Let me take a look. Let's see if we did an EMA 400. Could there be anything there? And it's even below the EMA 400, so I wouldn't want to look at any other EMAs. That's bad enough. So moving averages aren't supporting it. The cloud isn't supporting it. Maybe the Fibonacci's will find support. What's happening to volume? Where's my volume? There's my volume. And if we just look at a little bit lower, wider range here, we can see that there's not a lot of volume being traded. The big volume was on this down day. If you're a Jazz follower, you'll know what happened August the 4th. Take a look and see what happened that day. Was it earnings? Was it an FDA ruling? Was it bad results on one of their clinical trials? These are all the things that are probably more important in a biotech stock than the technicals.